Hey everyone, my name is Jordan Pearson. I made a promise a few days ago on Facebook that I would put together a tutorial for registered massage therapists where I show you how to file your income taxes using TurboTax online. Now, when my wife posted about this, I did not expect many people to respond, but the response has been overwhelming and extremely positive, which is awesome to see. I really hope that this is a valuable resource to many of you. Now, one thing I should make clear, because I'm not the one that's actually filing your income tax return, I'm obviously not liable for any mistakes that you make. So please note that you are using this at your own risk. Now, that being said, TurboTax has done a fantastic job of making things really easy to understand, and you'll see that once we get into it. Now, perhaps just to tell you a bit about myself, I am a chartered professional accountant. I earned my designation back in 2016. At that time, I was working for one of the big four accounting firms. So I spent 3 years working in their audit group and then 3 more years working in their forensic accounting department, where I was dealing with fraud investigations and just some really interesting stuff. Prior to that, I was in university. I earned my Bachelor of Business Administration from Mount Royal University here in Calgary. And then before that, I spent 7 years working in retail banking, where I was giving investment and financial advice. And now I work for Jensen CPA, and I do things like this. I teach webinars, and I teach people about accounting and income tax concepts, and I absolutely love doing this. Now, the reason why I am doing this is because I recognize that with everything that's going on right now, a lot of people are struggling financially. And certainly we're feeling the effects of it as well. My wife is a registered massage therapist, and she was devastated when she was told a few weeks ago that she could no longer work. And so my heart goes out to all of you who are struggling at this time. And so I really hope that this will be helpful. Now, many of you also know that I teach a webinar on Mondays from 9 until 3. This webinar has been catered specifically to registered massage therapists. And we go over a lot of accounting and business and income tax concepts. And so if that's something that is of interest to you, you can check out jensencpa.setmore.com. I'll include the link in the description. And this is a course that has been approved by many of the associations in Canada for continuing education credit. And so again, at that link, you can see which associations have approved this course. Now, one other thing I'll mention is, if you need help with anything, if you have questions about anything, please reach out to me. My email address is jordan@jensencpa.ca. Now, again, with everything that's going on right now, I've done what I can to make my rates as affordable as possible, and so please keep that in mind. Now, why don't we dive into this tutorial? It's going to be obviously very heavy in income tax, and so there may be parts of it that are boring, but I'll do my best to make it interesting and easy to understand. And then parts of it might be choppy because these things can be fairly complex. So we'll dive into it right now. Okay, so the first thing you're going to want to do is go to turbotax.intuit.ca. Once you get there, you'll select Sign In and then Continue My 2019 Tax Return. From here, if you already have an account with TurboTax, QuickBooks, or Mint, you'll put your user ID and password in here and select Sign In. If you're new to Intuit, you'll need to create an account here. Okay, so when you come to this landing page, it's going to list all of the tax returns that you're currently working on. So for this example, we will start a new return. So what this page is if you have used TurboTax to file your income tax returns in prior tax years, you have this option to transfer information from those completed returns. So it's not necessary for you to do this, but it can be helpful with some things. So let me give you an example. So if you have like any charitable donations, like unused amounts that you didn't use fully in prior tax years, or let's say capital losses that you need to carry forward, TurboTax will have information like that, and it'll just be transferred forward to the current tax year. Now, if you have no idea what I'm talking about, you can refer to your notice of assessment, which is what the Canada Revenue Agency mails to you after you file your tax return. And on that notice of assessment, it will have information that you would need to transfer to your 2019 tax year. So again, but for this example, we're just going to select skip transfer and start a new return. Okay, so what this page is TurboTax needs to gather some information so that they can decide which product is best suited for you. So, for example, if your income tax return is really basic, say all you have is a T4, your tax return can be very simple and it wouldn't cost you anything. But because you're a self-employed individual as a registered massage therapist, you're going to want to use this self-employed option. So you'll come over here, you'll select Start for Free, and then select Continue. Okay, and then TurboTax wants to know how you filed your taxes last year. So you'll just answer this question here. And then, are you filing this tax return for yourself or for your spouse and yourself or someone else? So again, you just select the option that applies to you. For the purpose of this example, I'm just going to keep things very basic and select it as if it was one individual. I could do the spousal option. Nothing really changes too much. The only thing that would be different is that there may be additional credits that you would be eligible for because you are married. And so, but again, the nice thing about TurboTax is you don't need to know what those credits are. They will just apply those to your tax return based on the information that you provide them. That's what I love about TurboTax. You don't need to be an accountant or a tax professional to be able to file your tax return. TurboTax makes it very easy. So we'll select myself. I'll put in your name. So here I'll just say test. And then TurboTax needs to know your marital status. So again, you just answer this question. So we'll say that I'm single and that my marital status did not change in 2019. Okay, so this question here, do you have children or financially support another person? It's a simple question, yes or no. But if you're not sure, the nice thing about TurboTax is they have these guide me buttons at like all throughout. And so if you're unsure about like whether you financially supported another person, you can select guide me and there will be additional questions to help you know how you need to answer the question on the previous screen. So again, you would just read these questions and then respond to them accordingly. So, but for the purpose of this example, we're going to say, actually, we'll say yes. So let's say you have a kid. So let's say you have a son. Okay, so you would add that information there and then select continue. Okay, so now they want to know more about your dependents. So the people on this previous screen, so this test child that I added here, they want to know more information about that person. So did you pay for someone to look after your child so you could earn income, go to school, or conduct research in 2019? So if you have any child care expenses, you would, again, select yes or no, however that applies to your situation. In 2019, did you receive a back payment of the UCCB? If that applies to you, yes, it's very simple. You would just select yes, and then you would have received an RC62 slip, and then you would just enter that in the relevant section within TurboTax. Because, again, I don't think that this is going to apply to many people because the UCCB has been done away with, we'll just select no for this example. Okay, so now on this screen, they're going to want to gather some more personal information. So we'll just put that information here. So English or French. So are you a Canadian citizen? Do you authorize the CRA to give your name, address, date of birth to Elections Canada to update the National Register? So again, just answer yes or no. I don't know why you would say no to that. Just say yes. Just makes things easier for you come election time. Are you a Canadian Indian as defined in the Indian Act? Again, yes or no. Are you filing an income tax return with the CRA for the first time? So if you've never used TurboTax before, but you have filed an income tax return in previous years, you'll want to select yes, right? Like if you filed an income tax return in 2018, you'll want to select yes. Sorry, no, I mean, sorry. And then this last question, do you need to file your 2017 or 2018 tax return? Again, yes or no. Okay, where did you live at the end of the year? So you just select the province where you lived. And then did you move to another province in 2019? Again, if that applies to you, you'd select yes or no, depending on your personal situation. Okay, did your Canadian residency change in 2019? Yes or no? I mean, this isn't rocket science. Like, it's really just going through and for the most part, you're just answering questions. You just respond to them based on your personal situation. So here we'll put your personal address in. Let me just make something up here. Okay, and then on this screen, this is just a personal info summary. So that's where, like all the information that you've given them so far, this is just a place for you to review all of that information and make any adjustments if need be. Okay, so this screen here, this is just information about the latest tax changes in Canada. So every year there are changes to the tax laws, and so those are summarized on this screen here. So one of the things that is highlighted this year is this climate action incentive, which is a refundable tax credit for individuals who live in certain provinces. And so there's just information about this climate action incentive credit on this page. So you can read this information and then hit continue. Okay, so the next step is building your tax profile. So in this section, TurboTax is going to ask you 1,000 questions about your personal situation so that they can pull out the relevant things from their software to make filing your tax return as easy as possible. The thing you need to keep in mind is that the Canadian Tax Act is like 3,400 pages, and so there's a lot of information in there. And so if every single thing in that tax act applied to you, it would take you forever to file your tax return. But TurboTax would be able to do that. So if you said yes to every possible question, like it would just take you it would take you a long time to click through every screen because you'd have a ton of information to enter. But for this, what you just need to do is just answer these questions as they apply to you. So did you work in 2019? Yes. If you were employed, like let's say you had a job, like most, I don't want to say normal jobs because that isn't fair, like, but a job where you would have all of your income reported on a T4, you would select this option here. Because you're self-employed, you would select this option. So I was self-employed. If you have some or all of your employment income reported on a T4 or a T4A slip, you'll want to select this option here. And then again, if you have any business expenses to claim, you'll want to select this option here. And then again, the province where your business is located. Okay, and then again, like if you had anything else here, you would just select the things that apply to you. So we should select this option. So I received tips or did casual labor and will not be getting a T4. So because most massage therapists do receive tips, this is something that you should select as well. Did you, your spouse, partner, or dependent receive split income? This is not something I'm going to touch on because chances are it's not applicable to most of you. The nice thing about TurboTax, something I should highlight, is that you'll see it, and there's a number of words that are highlighted in turquoise. And so if you're not sure about something, if you click that, it'll open up this TurboTax help box and it'll provide you with more information. And so if you wanted to know, like, hey, what is this split income all about? Like there's this blurb from TurboTax about what that is. And that'll help you. That can be helpful in answering these questions, right? So if you read this and you're like, hey, this actually does apply to me, then you can answer yes or no depending on your situation. So like I was saying before, like TurboTax is really helpful in that sense because, you don't need to be a chartered professional accountant or a tax expert to know how to do these things. Like TurboTax makes it really, really easy for the average person. Okay, did you make contributions to an RSP? Yes or no? So we'll say yes. We'll say that because a lot of people do contribute to RSPs. So we'll say that you did make contributions to an RSP during the contribution period. Did you withdraw money from a retirement account? Yes or no? Do you need to make repayments to the home buyer's plan or lifelong learning plan? Again, if you're like, I have no idea what the home buyer's plan or the lifelong learning plan is, if you click on it, it'll tell you exactly what that is. Okay, and so if that applies to you, you would just select yes or no. Did you have income from investments? Yes or no. So if you select yes, then there'll be more questions that'll be asked. Like, okay, did you have investment income reported on a slip? Like, yes, I did. Okay, which slip was it? Was it a T5, a T3, a T5008? Like, you just answer these questions accordingly. So if you have investment income that was reported on a T5 and you select T5, then when you get to the T5 section, and maybe for this purpose I'll just say that we did have investment income on a T5, when we get to the income section, it's then going to ask you, hey, you told us before that you had a T5. Let's enter the information on that T5 now. And so you just, again, select the things that apply to you. Did you have interest, dividend, or partnership income? Again, yes or no. So depending on how you answer that questions, there'll be more questions to answer. So we'll say no. We'll just say no to these other ones because they're very, like, did you elect to defer tax on a distribution of spin-off shares by foreign corporations? Chances are, for most registered massage therapists, that won't apply. That may be applicable to some of you, but it's probably a very small percentage of you, and so I'm not going to touch on that. So again, just answer these questions accordingly, and then hit continue. Okay, were you a student in 2019, or did you have student expenses for yourself carried forward from previous years? Okay, so again, yes or no. So if you're a new graduate, like this is your first year working as a registered massage therapist, and for part of the 2019 tax year, you were in school and you have tuition credits that you need to claim, like you would just, again, select yes, and then say, I had tuition fees on a T2202 slip. So again, you select whatever applies to you here, and then TurboTax will have a section later on, once you get to the deduction section, where they'll ask you for the information that is reported on your T2202. So, I mean, I'm gonna say no here. Like, it's very simple. Like, actually, maybe I'll just say yes, so that you can see exactly what it looks like when we get to that section. Okay, did you have moving expenses? Again, yes or no. Did you buy a home, condo, apartment, or mobile home this year? Again, yes or no. So I'm answering no to like all of these things because I mean, if I selected yes to everything, it would take, like, this video would be, 7 hours. It would take forever for me to talk about each and every single thing. And most of that information isn't going to be relevant to you, and so I'm only going to touch on the things that are common for registered massage therapists. But again, like, if you have foreign property and you need help on that, like, TurboTax does a really good job of helping you with stuff like that. Okay, other credits and deductions. Did you make donations to a charity or a political party? Again, I think a lot of people do make donations to charitable organizations, so we'll say that yes, I made charitable donations. I made donations to a qualified charitable organization. So to be able to get a tax deduction, it needs to be a charitable organization that is registered with the CRA. And so we'll say here that yes, I made donations to a qualified charitable organization. And then any other deductions like public transit, union or professional dues, alimony, stuff like that. Again, answer accordingly. If you're also a volunteer firefighter and a registered massage therapist, who knows? Like, maybe you are. Again, yes or no. Do you have a mental or physical impairment? Yes or no? Um, do you have any medical expenses? So again, so here's another like one of those guide me buttons where they'll ask you more questions to help you know whether or not you should answer yes or no to this. So we'll say yes, because I think most massage therapists and most individuals in general have medical expenses, and there's some interesting things that I want to touch on in this section. So I'll say that yes, I'm claiming medical expenses for 2019. So did you make tax installments payments for 2019? Because you're a registered massage therapist, I mean, depending on your unique situation, you probably don't have like your employer or whoever you're working for. They're not taking tax off of your pay and giving that to the CRA. And so you, as a self-employed individual, are responsible for either setting that money aside or making installment payments in 2019. So let's say for this example, we made $10,000 in tax installment payments. So whatever applies to you. If you made if you made no tax installment payments, so that's just income tax that you've paid to the CRA in chunks throughout the year, you would put that amount here. So let's say we paid $10,000 to the CRA in tax installment payments in 2019. And then, were you in prison? Yes or no? Hopefully none of you were in prison. Okay, so this is just a summary of your tax profile. So all of the things that we selected in those previous screens, it'll just summarize everything here, what's applicable to you. If you need to make any changes, you just select the edit button and then make those changes. Okay, select continue. So one of the things that's nice is that TurboTax allows you to be able to connect directly to the CRA. And so if you have, like, let's say you have a T4 slip or like any RSP contributions or that T5, like there's info that the Canada Revenue Agency already has. And so rather than you having to enter that information manually, that information can be added automatically by you logging into your account with the Canada Revenue Agency. And so if you select continue, if you have a CRA My account and you know that they have information about you already, about your income tax situation, you would select Launch CRA Site and then just log into your account, and then all of that information would be brought over automatically. Again, you can put things in manually if you want, but it's, if this applies to you, by all means, like, go ahead and do that. It just makes things a little bit easier for you. Okay, so what we do here on this next screen is they're going to try and sell you this package, this priority customer care package. So what it includes is this audit defense where they have a professional tax expert that represents you in the case of an audit by the CRA. So if the CRA comes back and they're like, hey, we need to audit you, and you get freaked out by that and you'd rather someone else deal with them, you can pay for this, and TurboTax would represent you in the case of in a situation where you were audited by the CRA. It also includes this ID protection. So you can say that you want this priority support, or you can reject that. It's totally up to you. I can't speak for these personally. I've never paid for any of these services, and so I don't know if they're worth having. I'm a chartered professional accountant, and I'm one of those weird CPAs that would actually really love to be audited by the CRA because I have things really well organized, and I just think it would be a really interesting experience. And so, again, whatever you would like to do here, it's totally up to you. Okay, so now they're going to start gathering information from you. So this next section is the income section. So we told TurboTax that we had investment income reported on a T5. So at the end of the year, when you receive that T5 from whatever investment company you're affiliated with, like let's say you have investments with TD Bank and you had some eligible dividends or interest or whatever, that would be reported on a T5 slip. And so when you get that T5 slip in the mail, what you would have to do is then, it's really not that hard. Like you would just put in the numbers from each of those boxes on that T5 slip into this section here. So if you have amounts in box 24, like an actual amount of eligible dividends, like you would just enter that amount here. So you would just put all of that information in this section here. And then once you've done that, you would select done with T5. I don't have an actual T5 slip on hand with me right now, so I'm not going to enter anything. But it's very simple. Once you actually have a T5 slip in front of you, it's just a matter of just putting the information next to the boxes that are listed there. So we'll select done with T5s. Okay, so this other employment income sources, if you have, okay, so this is kind of an interesting situation. So if you have, see here, tips, gratuities, or occasional earnings not reported on a tax slip from the payer. So if you're in a situation where you get, like let's say you work at a clinic and all of the money that clinic pays you, they report on a T4A slip, well, then that's going to have to be reported somewhere else. But if you don't ever receive a T4A slip from your clinic owner or whoever, like if you do all of the accounting yourself, like you don't get any T slips from them whatsoever, then what you should do, my personal recommendation, is that you put your tips, the tips that you've received, enter those here. Okay, and I'll tell you why later on. I guess I can tell you now. So really simply, if you put them in the self-employment, like the business section, you're going to end up paying more in CPP and EI. And so assuming EI is relevant to you, but you're going to pay more. And so what you want to do is include those tips in other employment income here. That's what I would recommend personally. So let's say, we'll go back actually. So let's say I had $1,800 in tips in 2019. So we'll just put that amount there. Okay, so this is the self-employment income and expenses section. So this is where I want to spend most of our time. So you'll select continue here. So you'll answer this. They want to know what kind of self-employment work you did. So are you a physician, a lawyer, a chartered accountant, an engineer, or other similar professional? Again, if you're not sure, like, what does this mean? What is a professional? TurboTax has some guidance around who fits within this category of professional income. Did you work in farming, fishing, or are you a rideshare driver, freelancer, consultant, contractor, or other type of independent worker? So for a registered massage therapist, you would want to select this option here. So select continue, and then continue. And so what you want to do on this screen here is put all of the information about your business. So your fiscal period, again, I don't want you to be alarmed by like what this term means, but if you're unsure, again, TurboTax has some guidance around what an actual fiscal period is. Because you're a sole proprietor, chances are your fiscal period is going to coincide with the calendar year, unless you've made an election with the CRA to have it to have your year end as something different. Like let's say your year end is March 31st. Like you can do that, but chances are you haven't. And so your fiscal period is going to be from January 1st, 2019 to December 31st, 2019. So what name did you use for your worker business? So because you're a sole proprietor, you can just enter your personal name here. So if you operated under a trade name, you can put that as well. And then what product or service did you provide? So it would be massage therapy. So did you have business partners? So if you've set your business up as a partnership, you would want to enter your 9-digit partnership business number here. I don't know any massage therapists who have established themselves as a partnership, so I'm not going to touch on that. For the most part, you're all going to be sole proprietors, and so you can just ignore this box here. This 6-digit tax shelter identification number, again, if that's applicable to you, like if you have this tax shelter and that's applicable, like you can enter that there, but chances are it's not going to be. And then if you have a GST account with the CRA, you'll want to enter your GST number here. Again, anything we do in TurboTax with respect to GST is not actually filing your GST return. Like, you can't do that in TurboTax. That would be done separately, but they still want to know some information about your GST status. So, and then, is this the final year of business, yes or no? So we'll select no. And then hit continue. So on this screen, again, you'll just want to put your work address. So this will be like your personal address. We'll see if this works. Okay, and then select continue. Okay, so on this next screen here, so the industry code for your type of work. So what you want to enter here is 621499. If you're not sure what this is, again, TurboTax has this option here. So if you select industry code, it'll open up this separate screen, and it'll tell you exactly what that is. So it's this North American Industry Classification System, and it's just a way. My understanding is that it's just a way for them to be able to track like statistical information for different types of businesses. And so the code that you would want to enter as a registered massage therapist, I believe, is 621499. So then you would select continue. Okay, so did you make a year-end adjustment? So again, I was mentioning earlier about fiscal periods. So if you have a fiscal period that is something other than December 31st year-end, you would be required to make an adjustment using this T1139 form. Again, I would bet that that doesn't apply to any of you, and so you'll just want to select no here. Okay, so did your self-employment work have business, like have partners? And then, did you earn any income from websites or web pages? So again, just answer these questions. Because you're a registered massage therapist, these probably don't apply to you, and so you can just select continue here. Okay, so on this screen, self-employment or business income, I want to draw your attention first to this line here. So self-employment commissions reported on T4A slips. So when we set up the income tax profile at the beginning, we said that we had amounts that were reported on T4A slips. So when we came to the income section, there should have been, the T4A section should have appeared, and you should have been asked to enter that information. I don't know why that didn't happen in this example, but that's not a problem. So what you'll do here is just on the left-hand side, if you click income, go down to T-slips, and then T4A, and so you'll select that there. It'll then take you to this page here, and then what you'll do is you'll enter new T4A. So if you click that, now because amounts reported on T4As are, there's a lot of information that could be reported on this, so things related to pension, retirement annuities, or other income. And so there's a lot of boxes, there's a lot of information that you could put into this section. Now, as an RMT, if you're receiving a T4A from a clinic, chances are everything is going to show up in box 48. So you'll have fees for services that's reported in box 48. Now you'll see here there's two box 48s, which is confusing. And so you're probably wondering why, okay, where do I need to put the amount that shows up on my T4A slip? So professional fees, those pertain to doctors, lawyers, chartered accountants, so professional type business. For all other types of business services, that would go in this box here. So as an RMT, you would put this amount in this box here. So let's say for this example, you were working at a clinic, and the revenue that you collected was $20,000, and then the amount of GST that was also paid out to you was, we'll say, 5%. So $20,000 plus $1,000, so $21,000 is what was paid out to you. So we'll enter that number there and then select Done with T4A. And then when we go back to the self-employment section, let me just click through each of these screens here. Okay, so then when you get back to the self-employment or business income section, you can see there this self-employment commissions reported on T4A slips. So the $21,000 that we entered in that T4A section is now going to show up here as self-employment or business income. And so that's great. That's perfect. That's exactly what we want to see. Now let's say in this example, this individual also runs a business out of their home. And so we'll say that they earned $30,000 in revenue and they charged 5% GST, so $31,500. Because we need to record any additional amounts that aren't reported on T4A slips. So if you have any other income that's not reported on a T4A slip, you'll need to include that revenue amount in this box here. Now these two boxes here, in most cases these aren't going to apply to you, so you can ignore these. If you do have self-employment income reported on a T4 slip in boxes 81, 82, or 83, you'll enter that amount here. And then if that's related to a placement agency, again, you'll just answer that question accordingly. But from what I've seen, RMTs, these two boxes are not going to apply. Now, this section here, so returns, allowances, and discounts. So the question is, did you enter your total revenue above before factoring any returns, discounts, or allowances? So they're referring to this number here. So if this number is before any discounts that you've given, then you would need to include the amount of those discounts in this box here. So let me give you an example. Let's say that you generally charge $100 for a 1-hour massage, and for whatever reason you decide to give a discount to new customers. Let's say that discount is $20. If you still record the full amount as income or as revenue, so let's say you recorded $100 here, but you also gave a $20 discount, well, at the end of the day, you only collected $80, and so you should only pay tax on the amount that you've collected. And so what you'll need to do is you'll need to record any discounts that you've given down here. Now, if you've recorded revenue up here after any discounts that you've given, then you don't need to put anything in this box here. So that's all that this is referring to here. In most cases, what I've seen is that revenue numbers are recorded based on the actual amount that is charged to the customer, and that's what I recommend. So you don't need to worry about entering anything down here if that's the case for you. Now this box here, so GST, so enter how much GST you collected for the tax year. So in this example, we have $1,000 in GST from the clinic, and then $1,500 in GST from the home-based practice. And so we'll enter that amount here, so the $2,500. Now these two boxes here, did you use the quick method to calculate your GST remittance? If so, enter the amount of GST you collected on eligible income, on sales, commissions, and fees. And then down here, enter the amount that you entered on line 103 of your GST return. Now, these two boxes only apply if you calculate your GST using the quick method. Now, again, if you have no idea what the quick method is, chances are you don't calculate your GST using that method. If you needed more information about what that is, you can click on this box and TurboTax will give you additional information. So, but from what I've seen, most RMTs, they're not using the quick method. And so just enter the amount of GST you collected in the tax year here. But obviously, again, if you do use the quick method, then you'll need to enter those details in these two boxes here. Okay, so we'll click on to the next screen. So here, there's this bit about reserves deducted in 2018. So enter any reserves you deducted on your 2018 business statement. So when they say 2018 business statement, they're referring to your 2018 income tax return. So this would include reserves for bad or doubtful debts, contingent accounts, or sinking funds. So you might be pulling your hair out at this point, wondering what the heck a bad or doubtful debt or a contingent account or a sinking fund is, and that's totally fine. So in most cases, this isn't going to apply to you as a registered massage therapist, but let me just explain to you what this is. So some companies, what they do is they deduct a reserve on their tax return, and it's what it is it's just an estimate for certain amounts that they're unsure about. So bad or doubtful debts, that's a really common one. So what that is let's say you have in your revenue amount, let's say a portion of that is items that so services that you've provided to customers and you've extended a credit to them, meaning they didn't pay you right away, they're going to pay you at some future time. And let's say you estimate that a portion of those receivables, a portion of the amount of money that you need to collect from customers at some future date, that you're not going to be able to collect those. And so those would be considered bad debts. And so what you can do is, if in previous tax years you had an estimate for bad or doubtful debts or any of these other things, you would need to then include those as income in the following tax year, so in 2019. So if you think that this might apply to you, what you would need to do is go back to your 2018 income tax return to see if you had any reserves that you deducted in 2018. But again, 99.9% of massage therapists, they're not extending credit to customers, and these other two things aren't going to apply. And so I don't think that this is something that you're going to need to worry about, because when a customer comes to you for a massage, you expect them to pay you right away, in most cases. Okay, so if you have any other income, you would report that here. So anything not reported on that previous screen. And then these two boxes, again, these aren't going to apply to you as a registered massage therapist. So we'll click on through to the next screen. Okay, so in this section, this is dealing with inventory. So did you sell products that you bought or manufactured? So again, in most cases, the registered massage therapists that I deal with, they're not turning over inventory. And so I don't want to spend a ton of time on this. But again, these questions, like TurboTax has done a fantastic job of making this really easy for you. And so all you would have to do is just enter the amounts in response to each of these questions, if this applies to you. So what was the value of your opening inventory at the beginning of the fiscal period? So any products that you had on hand at the beginning of the year that you didn't sell in the previous year, that would be your inventory. So what was the value of that inventory? What was the cost of those products at the beginning of the year? You would enter that amount here. And then any purchases that you made during the year, you would enter that here. These subcontracts or direct labor, again, because you're a sole proprietor, these aren't going to apply to you. They may in some circumstances, but in most cases, from what I've seen, unless you're manufacturing something, this isn't going to apply to you. And then what you'll do is you'll enter the value of your closing inventory at the end of the fiscal period. So that would be, when it says end of the fiscal period, that's December 31st, 2019. Okay, so you put in all those details there, and then what TurboTax does is it'll figure out what was the cost of the goods that you sold during the year. Okay, so we'll hit continue. So in this section, did you have any work-related vehicle expenses? So some of you I know, if you have a mobile massage practice, or if you're traveling to clients' homes or whatever, if you have any travel related, any travel that's related to earning business income, then you can claim a portion of your vehicle expenses. So what we'll do here is we'll say yes to this. And then on this screen here, so this can be a little bit confusing because you have two options down here. You have add a vehicle for business use or add a vehicle for test. So test, remember that's the name that I gave this person here. So in your example, it might say add a vehicle for Melissa or for Jordan or whatever. And so first of all, which option should you choose? So if you were filing an income tax return for a partnership, then you would want to select this option here. If you're using your personal vehicle, you're essentially lending that to the partnership. But because you're a sole proprietor, you're going to want to select this option here. So add a vehicle for business use. So we'll do that now. And so the first thing you're going to put in is the make and model of your vehicle. So let's just say, I don't know, 2010 Honda Civic. And then you'll enter
the total kilometers that you drove in the tax year. So for this example, we'll say that we drove 20,000 kilometers. And where you'd get that information from would be at the beginning of the year, you'd need to record your odometer reading. And then at the end of the year, you'd record your odometer. And then the difference between those two numbers is going to be the number of kilometers that you drove in the tax year. Very complex math, I know. So you'll enter that number here. And then this next question, of those total kilometers, how many did you drive in order to earn income? And so what you would need to be doing throughout the year is keeping a vehicle log where you record for each trip that you take that's related to earning business income. You would need to record the date, the destination, the purpose for that trip, and then how many kilometers you drove. So in this example, we'll say that we drove $2,000 for business purposes. And then what you would do is you would just enter in all of these amounts here. So how much you spent on fuel, insurance, license and registration, all of these amounts. So I'll just put in amounts here. I'll just make things up. Okay, and then if you have any business parking or any supplementary business insurance, you'll want to enter these amounts here. So let's just say we had $50 in parking and then $300 in supplemental insurance. So because these two items here pertain to your business, you'll be allowed to deduct 100% of these amounts here. Okay, but these items here, if you're using your vehicle for personal and business reasons, then these expenses will be adjusted based on how much you used your vehicle for business purposes. So in this example, we used it 10% of the time, and so you'd be allowed to deduct 10% of these expenses here. And so again, TurboTax will do the math for you. It'll figure out exactly how much you'll be able to deduct based on the information that you've given them. Okay, now this here, if you own your vehicle and you're financing it, like let's say you have a loan, you would enter the amount of interest for the tax year. So let's just say our interest cost was $400, and then you'll enter the date at the beginning of the year, so January 1st, and then the end of the year as well. Okay, if you're leasing your vehicle, then you'd want to enter these details here. Just again, at whatever TurboTax asks you for, you'll just enter those details here. And then capital costs. So if you own your vehicle, then you'll also be allowed to claim what's known as capital cost allowance. So capital cost allowance is sometimes also referred to as CCA, and what that is it allows you to be able to deduct a portion of the value of your vehicle each year. And so, because the thing you have to think of is like your vehicle, that's something that's going to be around for several years, but it wouldn't be appropriate for you to deduct the value of your car, to deduct the full value of your car in the first year that you owned it. And so what the CRA has done is they've set up this capital cost allowance for any fixed assets, for any capital assets. They allow you to be able to deduct a portion of that asset each and every year until you use up the full amount. Hopefully that makes sense. And so there's three asset classes for vehicles. So you have Class 10, which is any vehicle that is. Now there's a lot of other little rules around this as well, but I'm just going to focus in on the things that are going to be relevant to you. And so a Class 10 asset is a vehicle that's less than $30,000 would go in this class here. Class 10.1, those are for luxury vehicles. So let's say you bought a luxury car and it was $60,000. You would enter that in here as a Class 10.1 asset. What the CRA has done is that if you purchase a luxury vehicle, I mean, that's great for you, but they're only going to allow you to deduct up to $30,000 of the value of that vehicle. And so any luxury automobiles would need to go in this 10.1 asset class. And then if you have a zero emission vehicle, you would enter that into class 54. But our 2010 Honda Civic, for sure it's not a luxury vehicle, so that would be a Class 10 asset. Now, let's say, so there's a couple things I want to mention here. So let's say prior to 2019, you had purchased, we had purchased this Honda Civic back in 2010, brand new, but between 2010 and 2018, we didn't use it for business purposes at all. It wasn't until 2019 that we decided, okay, for whatever reason, we needed to use our personal vehicle for business purposes, and so we now want to deduct a portion of the value of that vehicle. So how do you enter that information into TurboTax? So what you would need to do is you would need to figure out what is the fair market value of your vehicle at the beginning of the year. And so you'll want to go to a resource like Blue Book or Auto Trader or some other reliable resource to figure out what is the fair market value of this 2010 Honda Civic. And then you would enter that here as the UCC at the beginning of the year. So what UCC is, again, if you're not sure, TurboTax provides a good explanation here. But really what it is, UCC stands for undepreciated capital cost. So it's just the value of the asset that you have left at the beginning of the year to be able to deduct for income tax purposes. And so let's say we did some research and we found out that our 2010 Honda Civic was worth $8,000. I don't know if that's reasonable, but we'll just say that that's what we found. And so we would enter that as the UCC at the beginning of the year. Okay, now let's say in a different example, let's say you have a 2019 Honda Civic, so you bought this brand new in 2019. You use it some of the time for personal reasons, some of the time for business reasons. And so your UCC at the beginning of the year is going to be 0, okay? And then you would enter the date that you purchased that vehicle, and then you would enter the purchase price of that vehicle before taxes. So if you paid, I don't know, $28,000 for this vehicle, you would enter that amount there. And then again, if you sold the vehicle, you know, if that's applicable to your situation, you would enter those details there. And then again, this question here only applies to whether or not you sold the vehicle. And so, okay, so what we'll do here, one of the other things I want to explain. So let's say that we purchased this vehicle on June 1st, 2019. So when you enter that date, there's this other box that's going to show up. And so what it says is this item is eligible for the accelerated investment incentive. And so if you click on this, like, what the heck is this accelerated investment incentive? TurboTax will give you some more information. What it is it's just any asset that was purchased after November 20th, 2018 is eligible for this investment incentive. And what it is it allows you to be able to deduct more than you normally would. And so typically what happens with CCA is in the year that you purchase an asset, like let's say you buy a car or a massage table or some other capital asset, in the year that you purchase that asset, you are only allowed to add half of the value of that asset to this CCA or capital cost allowance class. And then the amount of your deduction is calculated on half of the value of that asset. But what they've done, what the CRA has done for whatever reason, is they are allowing businesses to deduct more in the first year. And so you're allowed to take 1.5, so 1.5 times the value of the asset, and calculate your capital cost allowance on that amount. And so again, if this is confusing to you, you don't need to know the math that goes into this calculation. All you have to do is answer, okay, is this item eligible for the accelerated investment incentive? Answer yes, like if it is, based on this information, right? If you purchased the asset after November 20th, 2018, then you would be eligible for that. There are some reasons where you might not be eligible for that. So if the asset was owned by you personally before acquiring it, like let's say the business purchased this asset from somebody that was related to you, then you wouldn't be able to you wouldn't be eligible to claim this investment incentive. But let's say that doesn't apply. You'll just answer this question, so we'll say yes. And then TurboTax does all of the complex math for you, and they tell you, okay, based on the information you've given us, this is how much you can deduct. Okay, so we'll say done with auto, and then you can see here. So it can tell, okay, your business use, because you told us that you drove 2,000 kilometers for business purposes and 20,000 kilometers in total, so 10% was driven for business use, and then it calculates your allowable motor vehicle expenses. And then here it calculates the CCA, the maximum CCA that you would be able to claim for the tax year for this vehicle. Okay, so hopefully that makes sense. Again, if you're confused about anything, TurboTax has some really good tools built in here, those turquoise buttons that help you to understand a little bit more. So we'll click Done with Vehicles. So this next section is where we enter our other business expenses. And so what we'll do is we'll go through each section here. So the first thing is, did you pay for advertising? So common examples, business cards, websites, online ads, email marketing, brochures. If you're advertising in a newspaper, I don't know why you would, or a magazine, or let's say you have a TV ad, right? All of that you can deduct for income tax purposes. Now, if you're confused about, well, I'm not sure about like how much I should be entering into this box here, if you select this Guide Me button, TurboTax will ask you additional questions to help you figure out exactly how much you should be able to deduct for advertising. So, and the reason why that's important is because if you are advertising in like magazines or newspapers, there are some restrictions on how much you can deduct depending on this here, the original editorial content of those periodicals or publications. And so again, what you'd want to do is, like, there's restrictions that apply in these cases, and so you'll just go through this section here and answer, like, read through this information and answer the questions accordingly. So if you had any advertising expenses in newspapers, newsletters, or catalogs or magazines, you'll want to enter those amounts here and then click Next. And then same thing. So did you pay for advertising in a periodical directed at a Canadian market and the original editorial content in the issue is less than 80% of the issue's total non-advertising content? So again, if you're like, I don't understand what that means, original editorial content, TurboTax provides a really good helpful tool here. And then you'll enter that amount there. Okay, and then again, did you broadcast on TV or the radio? So the thing I want to point out is that specifically with advertising, is that in most cases, from what I see, registered massage therapists, they're not advertising in magazines or newspapers. They may be advertising, let's say you have a Facebook ad or Instagram, something a little bit more modern, or if you have a website, like any of the website registration fees or the hosting costs associated with that website, like all of those costs are deductible 100% for income tax purposes. And so, so if we go back here to the beginning section, if that's all your advertising costs, like if those are the only things, if you're not advertising in a newspaper or a magazine, then just enter the full amount of the advertising cost in this box here and click Continue. Okay, so this section here, did you pay for meals or entertainment? So how much did you pay for work-related meals, beverages, and entertainment? Again, there's restrictions on how much you can claim or how much you can deduct for tax purposes. So the general rule is that you're only allowed to deduct 50% of the cost. And so, but again, there are situations where you're allowed to deduct more than that, where you're allowed to deduct 100%. And so if you're not sure, if you click this Guide Me button, then TurboTax will provide you with some more information here to help you understand how much you should be claiming. So again, like if you had, just to look at one example, so do any of the following situations apply to any of the meals and entertainment expenses? They were incurred to provide a Christmas party or a similar event to which all your employees were invited, a maximum of 6 such events per year. So what these questions are related to are, these are situations where you would be allowed to deduct the full value of the meals and entertainment. And so you would enter that amount here. Okay, this next screen would be for anything else. And so anything that applies there, again, you'll have to read through. I'm not gonna read all of this because that would just take a long time. But these are really simple questions. And so for each of these, you'll just want to enter the amounts of meals and entertainment that apply to you for each of these examples. Okay, and then it'll tell you at the end, okay, this is how much is deductible 50%, this is how much is deductible 100%, and this is how much is not deductible at all, right? So an example is like if you have any memberships to like a yoga membership or any like gym memberships, anything to any sporting facilities, you're not allowed to deduct those at all. And so TurboTax will catch that based on the information that you give them, and they'll let you know that, hey, you're trying to write off this yoga membership, but you're not allowed to. And so TurboTax is really good at helping you avoid any significant errors or mistakes. Okay, so we'll select continue. So this here, did you pay any wages or salaries to anyone? So because this example is a walkthrough of somebody who operates as a sole proprietor, this wouldn't apply. But if you do have people who are working underneath you, then you would want to enter the amounts of their wages, salaries, your share of CPP and EI, like all of this information here, you would want to enter into this box. Okay, so any work or business related travel. So again, if you're not sure about whether or not you have any eligible work or business related travel, if you click this Guide Me button, there's some questions here. So did you travel out of town for business? And that would include things like sales calls, professional training. Like let's say you drove to another city to attend a course on accounting, because that sounds like a really exciting thing to do. Or if you met with employees at another location, or any of these things here, you would be able to claim those travel expenses. So you'd say yes, and then you would just enter the amounts. Again, you just answer each of these questions. So did you travel by train, bus, or airplane? Enter the cost there. Did you rent a vehicle specifically for travel? Again, so you just go through and answer each of these questions here. Did you pay for accommodations? Yes or no? Did you pay for public transportation? Were you reimbursed at all for any of these travel expenses? That's an important thing to note. Like you may have expenses, but if you were reimbursed for those expenses by someone else, then you're obviously not allowed to deduct those for income tax purposes. That makes sense. Okay, and then this would just be a summary of your business-related travel expenses. Okay, so did you have any doubtful accounts? So this goes back to that reserve that we were talking about before. Well, sort of, it does. So let me just read this here. If you have previously included a receivable amount in income, but have now determined that you will be unable to collect the amount from the customer, enter the amount here. So let me give you an example. Let's say in 2018, it was December 2018, a customer came to you and came to you for a 1-hour massage. You charged this customer $100. Well, you gave that service in 2018, and because you're so nice, you said to this customer, he wasn't able to pay you, and so he was like, yeah, I'm going to pay you when I get paid in January. And so you're like, okay, that's fine, that's no problem. And so you decide to include that, as you should, because you gave that massage in 2018. That should be included in income in 2018, even though you haven't collected the money yet from the customer. And so let's say you included that amount on your tax return in 2018. You ended up paying income tax on that amount because it was included in revenue. And then now 2019 comes along and you look back and you're like, hey, I never got paid from this guy who I gave this massage to. And so you're like, well, that sucks because I included it as income in my 2018 tax return. Well, that would be an example of a bad debt. So what you would need to do here is, in this example, is you would enter $100, right? So if you had $100 that you included in income, but you never collected that money from the customer, well, this would be a bad debt or a doubtful account that you are never going to collect, and so you'll enter this amount here. So hopefully that makes sense. Okay, so we'll select continue. So did you pay for licenses, business taxes, or dues? So any dues that you pay to your professional massage associations, that would be included here. Any other like business registration fees that you have to pay, you would include those amounts here. Any shipping expenses, if that applies to you, you can enter that here. Did you pay for fuel for machinery used in your business? So this, unless you have some fancy machine that does massage for you, this wouldn't apply to you. So this would be fuel specifically for machinery. As an RMT, that's not something that would apply. Did you pay for commercial insurance? Again, if you paid any insurance premiums for commercial insurance, you would enter that amount here. So if that applies to you, you can enter that amount. Did you pay any interest for maintenance? So how much did you pay in interest? So if you, let's say you took out a loan for your business, or you had items that you charged to a credit card, and you paid interest on that for whatever reason, you would enter the amount of those interest costs in this box here. Did you pay for repairs and maintenance expenses for your business property? So because you're operating as a sole proprietor, assuming you use, assuming you're working for a clinic or a spa or whatever, you're not going to have repairs and maintenance expense for your business property. Like, that's just not something that would apply to you, and so you wouldn't include anything here. Now, if you have expenses that pertain to your home, like let's say you operate a home-based business and you do some major renovations to your home. So we'll talk a little bit about that in the business use of home section. You're not going to want to include any of those costs here. So, and I think that's noted here. Yeah, so, yeah, okay, so let's move on to the next section here. Sorry, like I said at the beginning, this might be a little choppy at times, so just bear with me. Okay, so how much did you pay for office expenses? So this will just be things like pens, papers, pens, pencils, paper clips, just like general office related expenses. You'll enter those amounts here. And then any other supplies. So what would be included in other supplies would be like any of your massage lotions, linens, any essential oils, like any of the supplies that you need to do your work as a registered massage therapist would be entered in this box here. Again, if you're not sure about what to deduct for office expenses and other supplies, you can select this Guide Me button here. So let's say you had, I don't know, $300 in lotions and linens, and then you had $50 in office expenses. Okay, so banking and other fees. So what would be included in this is obviously any fees that you're paying to your bank to operate your business account. And you would also include any amounts that are paid to a merchant. So if you use Square or Moneris or some other sort of merchant terminal to collect payments from customers, you would enter the fees that you were charged for using that. You would enter those fees here. And then how much did you pay for professional advice and service? So that would be like any consulting fees. If you hire an accountant to file your income tax return, you would include these amounts here. Okay, did you pay for property taxes or rent? So again, this property taxes, that would apply to a building that belongs to your business 100%. If you have property taxes on your home and you're using part of your home for business, that's going to be entered in a different section. So you wouldn't want to enter that here. Now, how much did you pay for rent on the building where your business is located? So if you are, let's say a good example for if you're renting a room at a clinic, you're charged rent and you actually have to cut a check and pay rent to the clinic owner, you would enter the amount of your rent in this box here. I mean, hopefully this is fairly intuitive. Like these are not challenging questions. Like you just have to answer these questions, read through this information and ask yourself, does this apply to me? If so, then enter the amount. So here's a good example. How much did you pay for telephone and utilities on your business property? So enter how much you paid for telephone, water, heat, gas, and electricity on your business property. If you're using part of your home for your work or business, don't claim those costs here. We'll enter that information later. So again, if you have, like, let's say you have a cell phone that you use 50% of the time for business, it's your personal cell phone, you would enter 50% of the cost of your cell phone bill here. If you have utilities, let's say you have a clinic totally separate from your home, any of the utility costs to operate that business property or related to that business property, you would enter these amounts here. Okay, so let's say we use half of our cell phone. Okay, and then how much did you pay for other expenses? So this would be anything else that's not included in any of the other sections that we've gone through so far. So this would include things like conventions, like any leasing or like any modifications that you've made for like disability related purposes. So again, if you're not sure about what other expenses you have, if you select the Guide Me button, TurboTax does a really good job of helping you recognize other expenses that you may be eligible to claim. Okay, so you can enter those amounts there and then click Continue. Okay, so this next section is related to fixed assets. So these are capital assets, things that are going to last more than 1 year. So a good example would be for RMTs would be a massage table. Like let's say you spent $1,000 on a brand new massage table. It's not appropriate for you to deduct the full cost of that massage table in the year that you purchased it. You would need to claim a capital cost allowance each year until you end up deducting the full value of that asset. Or the other example that they give is if you spent $1,000 on a computer for your work or business, only amount that would be claimed, like again, you'll take CCA on a portion of that and claim that in this tax year. And so let's go through here and I'll show you how to enter a capital asset. So let me just show you this here. So the first thing that you'll need to do is enter the unclaimed capital cost allowance for any of your assets. So if you have fixed assets and you've claimed CCA or capital cost allowance in previous years, then you'll need to enter the opening balance, the opening UCC balance, so the opening undepreciated or unclaimed capital cost at the beginning of the year. And so again, if you have no idea what I'm talking about, what you can do is if you go back to your 2018 tax return, in the section that deals with your business, there should be a schedule where they have all of your fixed assets listed, and it'll have all of the asset classes that you've claimed CCA on listed on that schedule. And so let's say, for example, if you have Class 8 assets, it should list on that schedule Class 8 and then what the ending balance of like what your unclaimed capital cost at the end of 2018 was. That's going to be the opening balance of your unclaimed capital cost in this tax year. So if that applies to you, you'll need to look at that schedule from your 2018 tax return to see if that applies. Now let's say, so for this example, we'll just say that we don't have anything. So let's just go back. But let's say in this tax year, in 2019, you purchased a brand new massage table. So the first question you probably have is, well, which asset class does that go in here? So you can see that there's several options. The list is very long. So the ones that are going to apply to you, I mean, all of these could apply to you, but as a sole proprietor, registered massage therapist, the most common ones that you're going to see are Class 8 and maybe Class 50. So if you purchased a computer, then that would be a Class 50 asset. Again, you can go to the CRA's website. I know going to the CRA's website is always a fun experience, but you can go to the CRA's website and look up CCA classes, and it'll give you information about all of these asset classes and which assets fit into each of these asset classes. So, but what I can say is if you purchased a massage table, that would be treated as a Class 8 asset. And so let's select this here. We'll say that we purchased a massage table, and we purchased that on, I don't know, June 1st, 2019. So you'll remember from the vehicles section, this bit about the accelerated investment incentive. So again, because we purchased this massage table after November 20th, 2018, we would be eligible to claim this accelerated investment incentive. And so you would select yes, and then enter the cost of that asset. So let's say we spent $1,000 to purchase this massage table. And so the nice thing about TurboTax is it'll then figure out, it'll do all the hard math for you. It'll figure out how much you can claim for CCA, for capital cost allowance, on this massage table in this year. And so let me just go through this information here. So for UCC at the start of the year, we said that we had no other Class 8 assets at the beginning of the year. And so the value of our UCC at the beginning of the year was 0. This cost here, this is like any additions that we've made during the year. So any new Class 8 assets that were purchased in the year, the cost would show up here. So because we purchased a massage table for $1,000, that shows up here as $1,000. Now this base amount, what that is, this is the base amount that is used to determine, so like the rate that you would apply to figure out your CCA amount, that rate would be applied to this base amount here. And so for Class 8 assets, you're allowed to take 20% of the base amount. Now where they got this $1,500 from, that's related to the accelerated investment incentive. So because we purchased this massage table in 2019 and we're claiming that accelerated investment incentive, we're allowed to take 1.5% of the value of that asset and include that as the base amount. And then our CCA, our capital cost allowance for this year, is calculated on that base amount. So that would be for Class 8 assets, it's 20%. So 20% of the $1,500 would be $300. Okay, so hopefully that makes sense. The thing I love about TurboTax is, you don't need to know all of the nuances about how CCA works. You just provide them with the information that's specific to your situation, and then it'll do the math for you. Okay, so select done there. This next section, did you use a part of your home for work? So if you operate, let's say you have a room in your home that you use solely for massage. You have clients that come over, you massage them in this room. Then you obviously have a workspace in your home that you could use to allow you to claim a part of the expenses on your home. Now, if this space is used for work only, then obviously you're allowed to claim 100% of that space because it's used solely for work. But if a portion of that space is used for personal reasons, like let's say you have a home office and 50% of the time you use that home office for business purposes, and then 50% of the time you use it for personal reasons. And so you would need to take a further reduction, like you would need to tell TurboTax, okay, I have this room, but I only use this room 50% of the time for business, because then it'll figure out how much of your property expenses you'd be allowed to claim on your tax return. And so in this example, we'll just say that you have a room that you use to meet with clients. And so we'll say, yes, I have home office or workspace, and then that was used solely for business purposes. So when you click continue, in this screen here, what they want to know is what was the square footage of the room that you used for business purposes. So let's say the room that you used to meet with clients is 150 square feet. And then what's the total square footage of your house? So we'll say that your house is 1,500 square feet. So again, you'll just enter that information as it applies to you. And then you enter in all of these details here. So how much did you spend on heat? So I'll just make up some numbers here. So heat, electricity, mortgage interest, insurance on your property, any maintenance costs, and then property taxes. So, and then if you have any other expenses like internet, telephone, like let's say you have a landline, you can put those amounts here. Okay, and then when you select continue, so that completes that section. So let me just give, I'm going to go back. There's one other thing I want to mention about property expenses. So one of the questions I get all the time is whether or not I should be deducting capital cost allowance on the value of my home. So that's a complex question, and it really depends. But in most cases, the answer to that question is no, you should not. And the reason being, if you don't want to claim capital cost allowance on your principal residence, because you could run into tax issues when you sell your home. You may be subject to capital gains on your principal residence when you sell that property. Now, when you sell your property and it's your principal residence, if you've incurred a capital gain on that property, that capital gain is not subject to tax. But if you've been claiming CCA on your property all of these years, then a portion of that property has been used for business purposes, and so it would no longer be eligible for this principal residence exemption. And so a lot of people, they want to claim CCA on their house, and that would provide you with a tax deduction now, but when you sell your house down the road, you wouldn't be eligible for this principal residence exemption, and so you could be hit with a really big tax bill later on. And so generally speaking, I recommend that you don't take CCA on your property. And so if you have any like major renovations that you've done to your property, like that's fantastic, but you're not going to be able to realize any of the costs associated with that unless you decide to claim capital cost allowance on your principal residence, again, which is something that I don't recommend doing. Okay, so let me just go through this self-employment or business summary. So this is just a summary of your income and expenses. So in the income screen, remember we said we had $20,000 from the clinic and then $30,000 from our home-based practice. And so that's $50,000 in gross income that we've reported. Now, cost of goods sold, that would be related to any inventory that you have. So if you're selling products, the costs associated with selling those products, like the cost of those products that you've sold, that would be included in this line here. And then your gross profit is obviously the difference between those two. Okay, the expenses summary. So business expenses, they've summarized those amounts there. The vehicle expenses, so that amount is pulled from the vehicle screen. And then CCA, that includes CCA on your fixed assets and then also CCA on your vehicle as well. And so your total business expenses, and then so gross profit minus your total business expenses gives you your share of income. And then down here there's this further deduction for business use of home to come up with your net income. So this is the amount, this net income number here, this is what is subject to taxes. And so we'll click continue. And then there, you're done. So that completes the self-employment or business section. So you then select done with businesses. And then continue. Okay, so this is really important. So if you have entered into an agreement with the with Canada Employment Insurance Commission to participate in the EI program, then you would want to enter yes or no, depending on your current situation. So if you've opted to pay into EI, then you would say yes. But if you haven't done that, if you haven't entered into an agreement to pay into EI as a self-employed individual, then you would keep that as no. Again, that would just be specific to your situation. So I'll just show you what happens. So if you say yes, like you've entered into an agreement, then when we hit continue, TurboTax calculates the amount of EI that you need to pay, and then that's just included in the balance due that you need to pay to the government. Okay, so employment insurance premiums on self-employment and other eligible earnings. So if you are a registered Indian or person entered to be registered under the Indian Act, you'd be exempt from self-employment income on a reserve in Canada. So again, you'll just enter any tax-exempt self-employment income here if this applies to you. And then same thing here, just respond to this question. In most cases, what I've found, this isn't going to apply to, at least most of the massage therapists that I've dealt with, this doesn't apply, and so you can ignore this section. Obviously, don't ignore it if it does apply to you. Okay, and then continue. So this investment tax credit, again, this is something that's not going to apply to you as a registered massage therapist. I mean, there are, I guess, some situations where it could, but from everything that I've seen personally, it's generally not something that would apply. So this would be like if you're doing any scientific research and experimental development, if you have any experimental development expenses, then there's a deduction that you're allowed to claim related to that. Or if you have this like apprenticeship job creation tax credit. So again, if that's something that applies to you, there's more information here about that. If you have an apprentice that's working under you, if you have this investment tax credit for childcare spaces. So let's say you had a clinic and you've like carved out a space for childcare. There may be additional credits that you'd be able to claim in relation to that. Or property bought or expenditures made before 2019. So again, these are things that I haven't seen, like they haven't applied to the registered massage therapists that I've dealt with. But again, if you want more information about what this is, TurboTax does a great job of providing a summary there. Okay, so you can ignore this section, select continue. The location of your business, I don't know why it's asking you for that again, because we already told them, but we just select the province where your business operates. And then here's a summary of your income. So you remember before we said we had $1,800 in tips that we've recorded, and then we have our self-employment income down here. So our total income in this example, $46,387. So you select continue. And so now what TurboTax does is they want to try and sell you these additional services, which is totally fine. If this is something that is of interest to you, then you're welcome to purchase it. So what this is, this TurboTax Assist and Review, there's somebody that can they have somebody review your tax return to make sure that there's not like any glaring errors or anything that you've missed. This is not a service that I've used myself, so I can't speak from personal experience. Obviously, there's no reason why I would buy this as a CPA. I can just do it myself. And so again, if these are things that are of interest to you, you can upgrade, or you can choose not to upgrade. The choice is yours. Okay, so this next section deals with RSPs. So we'll click continue here. So in the next screen, we'll enter our RSP information. So the first thing that we need to tell TurboTax is what our 2018 RSP deduction limit was. So like at the end of 2018, when you got your notice of assessment after you filed your 2018 income tax return, it'll have on there your RSP deduction limit for 2019. So what you're going to want to do is get your notice of assessment from your last tax year and then enter what your RSP deduction limit is from your notice of assessment. So you may remember at the beginning when we had the option to transfer information from our prior year tax return. This is an example of where that comes in handy. So TurboTax would have this information already based on the tax returns that you've done. And so this would be something that would normally just get transferred automatically. So, but not a big deal. You just get that information from last year's notice of assessment and then enter it here. Okay, so for your RSP contribution, all you need to do is just enter the name of the RSP issuer. So let's say you have an RSP at TD Waterhouse or TD Bank. So you'll just enter, you don't have to enter anything, but you just enter TD and then the contribution period. So there's two periods here. So March 2nd to December 31st, 2019, or January 1st to March 2nd, 2020. So any RSP contributions that are made within this period, March 2nd, 2019 to March 2nd, 2020, are eligible for deduction in the 2019 tax year. So let's say that during this period, I made a $1,000 RSP contribution to my own RSP. If you've made any contributions to your spouse's RSP, like if you have a spousal RSP where your spouse is the annuitant, like the owner of that RSP, but you are set up as the individual that contributes money to that RSP, then you would be the one that gets the tax deduction from any contributions that are made to that RSP plan. So, and you can just enter, so after we're done with this, you can just enter another one if you want. Like you just enter as many as you need to. So let's say we had another RSP contribution during this period, and you would just enter that amount there. And then say done with RSPs. And then on this next page, we have a summary. So it'll just tell you, okay, contributions for 2019 and then contributions for the first 60 days of 2020. And then select done with RSPs. This is just a built-in tool that allows you to be able to see if you had donated more money to your RSP, what the tax savings would have been, right? So if you had donated an additional $5,800 to your RSP, the additional tax savings to you would have been $1,450. So it's just kind of a handy tool. Okay, so this is just a summary of your RSPs. So you can review that and then click continue. Okay, and then in this next section, we go over deductions. So what we told TurboTax at the beginning was that we had dependents and that we also had charitable donations as well. So when you select continue, the first thing it's going to ask you is any donations that you've entered. So you can enter donations as a total amount, or you can enter those donations individually. So let's say you've made donations to United Way and the Cancer Foundation or any other eligible charity. So it would have to be a charitable organization that is registered with the Canada Revenue Agency. You're only allowed to claim those charitable donations. And so you'll just enter those amounts here. So let's say we donated to United Way $500, and then you can just add another one. And then just select done. So then there's your charitable donations receipt summary and how much you've donated, and that's it. So you say done with donations. And so one of the things that TurboTax will do is there may be some situations where you've, like if you're really charitable and you donate a ton of money, then there may be no additional tax incentive for you to claim all of those charitable donations in this tax year. And so you could carry forward those charitable donations to future tax years. And so what TurboTax will do is it'll be able to tell, hey, it'll be able to tell whether or not you've claimed too much, and it'll tell you to carry it forward to future years. You can obviously override this optimization if you want to. Like, let's say this donation of $1,000 this year, like, I want to wait until next year to get the tax benefits. You could do that. You could say, yes, I want to override this, and then I want to claim $1,000 next year, or whatever amount. If you just want to claim $100 next year and only claim $900 this year, whatever you decide to do. Okay, so we'll say that we don't want to override this optimization because TurboTax has calculated that there's no real incentive. Like you'll be able to realize the full benefit from those charitable donations in this tax year. So we'll click continue. And then this is just, again, just a a summary of donations claimed and carried forward. Okay, so this section, so paid tax installments this year. So when we set up our income tax profile, this is one of the numbers that we had entered. So the amount of tax that we had paid as installments throughout 2019. If you haven't paid any income tax installments during the year, let me just give you an example. So let's say it's 0. Then you would see that you would have a considerable amount, assuming that everything else in this this example would apply to you. But you can see here that there's a significant tax bill if you don't pay installments. And so just something to note. It's good, at the very least, you should be setting money aside so that you're not hit with this massive tax bill at the end of the year. Okay, so this is where we tell TurboTax about our dependents. So we had, I think we called the person, Test. So this is our child. My name is Test, and my child's name is also Test. So did Test live with you in 2019? Yes or no? What province or territory did Test live in on December 31st, 2019? And then what's their social insurance number? You don't actually have to put in the social insurance number. And then is Test's income 0? So if you have a young child, like, unless your child's a YouTube star and they make tons of money, the answer to this question would be no. If you have a teenage child and they do have income, then you would need to enter the amount of their net income. So you would go to their tax return, look at line 23,600, and enter the amount of their net income from their tax return. And so for this example, we'll say that there was no, yes, is Test income 0? So yes. Okay, so was Test a student in 2019, yes or no? And then does your dependent qualify for the disability tax credit, yes or no? Okay, did you pay for childcare? So did you pay for childcare or for someone to look after your child in 2019 so you could do any of the following? Earn income, go to school, or conduct research. So let's say yes. So let's say if this applies to you, like if you were in an educational program, you would enter the number of full months you attended school part-time only, or the number of full weeks you attended school full-time. So you would enter this information as it applies to you. And then this is where you would enter all of the receipts related to those childcare expenses. So if you have, so you would put who is this expense for? So you would select the child that this applies to, and then the name of the person, company, or organization that you paid. So whatever that company name is. If you're paying a person to watch your child, you would need to enter that person's social insurance number here, and then the amount that was paid during the tax year. Okay, and then so you'd enter all of that information there and then select done. Okay, so this next section, claims for dependents. So there are many credits you may be able to claim for your dependents. So, and then TurboTax gives a listing of what those additional credits may be. So would you like to review or claim any of these credits? You might as well select yes, just to see if there's anything that you are eligible to claim. So in this next screen, you'll select Enter Credit Info, and then it'll ask you, which credits do you want to claim or edit? And so if you had a child who was in school and you wanted to transfer, let's say you're paying their tuition and you want to transfer those amounts to you, you could select that there. If you have a child who is disabled and you're caring for them, you may be eligible for this disability tax credit, and so that can be transferred to you as well. Again, if you need more information about how that works, you can get that here. Amount for an eligible dependent, we'll talk about that. And so Canada caregiver amount, and then adoption expenses. So if you're not sure about what any of these credits are, you can read this here for more information to see if they apply to you. Okay, so amount for an eligible dependent. So we've selected that we want to claim the amount for this eligible dependent. If you're not sure if you qualify, if you're allowed to be claiming this, then let's just select this Guide Me button, and it'll TurboTax will ask you some additional questions to help you understand whether or not you can claim this. So did you support your parent or grandparent or your child, grandchild, brother or sister who was either under 18 or mentally or physically infirm? Okay, so in this example with the person that I've set up, I have a little kid, and so that's under 18, and so I would answer yes to this question. Did this person live with you at any time during the year in a home that you maintained? Yes. Has anyone else made a claim for this person as an eligible dependent? Okay, so let's say you're separated and your spouse is the one that's claiming this amount on their tax return, then you would need to say yes. And then TurboTax would say you cannot claim the eligible dependent amount. But if that's not the case, then you would say no. If you have a spouse, are you claiming the spousal amount? So the spousal amount and the amount for an eligible dependent are essentially one and the same. So if you're married and you're claiming the spousal amount, then you cannot claim the eligible dependent amount. But if you're single, you obviously wouldn't be claiming the spousal amount. And so in this situation, you can claim the eligible dependent amount for this person. You can only claim the eligible dependent amount for one person, even if you have more than one, right? So if you have 3 children, right, you wouldn't be able to claim the eligible dependent amount 3 times. You would only be allowed to claim it once. So we'll select continue here. And then we'll say, okay, yes, I want to claim this amount on my return. And then continue. And so you can see there the refund amount went up because we now have that additional credit that we've included on our tax return. So this tuition transfer amount, so if you have a child in university and you've paid their tuition for them, they have no income. Let's say they have no income, and so it doesn't make sense for them to claim those tuition credits, then those can be transferred to you. So once we're done entering credits, we'll have this summary here. It'll show you the amount for the eligible dependent. So this is the amount of the credit that you're allowed to claim, and then the total amount there. So both for federal and for provincial. Okay, so on this screen here, this is where we will enter our medical expenses. So obviously you're only allowed to claim eligible medical expenses. If you're not sure about which medical expenses are eligible, you can click here for additional information. And then you'll see here it says your total must be greater than $1,260. So you only get a tax benefit when your medical expenses exceed 3% of your income. And so if you're, let's say for example, in this situation, our medical expenses totaled $1,260, where there would be no tax benefit to us whatsoever. But if our medical expenses were $1,500, then we would get the benefit on the amount that exceeded the $1,260. And so what you need to do here is just enter new medical expenses. I wouldn't bother doing this if it was less than that number on the previous screen. Obviously, if it is greater, then you would want to enter this here. So you can enter medical receipts individually, or you can enter the total amount here. So the choice is yours how you want to do it. So we'll select continue and then done. And then do you want to claim the medical expenses, yes or no? So you must choose the best claim period for your medical expenses. So the thing to note is that, again, you can click this for more information, but for medical expenses, it must fall within a 12-month period that ends in 2019. And so let's say, for example, you had a really significant medical expense at the end of 2018, but for your 2018 tax year, it wasn't enough to be able to give you a benefit on your 2018 tax return, and so you didn't bother claiming it. And then at the beginning of 2019, you had some additional significant medical expenses, then you could carve out that 12-month period so that it ends in 2019 but captures a portion from 2018 to ensure that you're claiming the greatest amount of medical expenses possible, whatever results in you being able to claim the most. But again, it has to be a 12-month window. You can't claim 13 months or 14 months. It has to be a 12-month period. Okay, so we'll select continue. And then this next section is your student profile. So we told TurboTax that we had tuition fees on a T2202. So when we select continue, it's then going to ask us to enter the information from that slip. So again, you'll just take the information on that T2202 slip and enter the details in each of these boxes here. So the number of eligible tuition fees paid, eligible tuition fees paid to a foreign educational institution, again, if that applies, the number of part-time months, full-time months, and then if you made any charitable donations, you would enter those amounts here. Okay, so you'd fill that out accordingly and then select done with tuition fees. And then this is just a summary of your tuition fees. And then again, this is just a summary of your, we haven't filled anything in, so, but this would be a summary of all of the things that pertain to your student expenses, your student tuition. Okay, so here is a summary of all your deductions. So you have your deductions for RSPs, for your childcare expenses, for CPP. You then have deductions related to personal amounts, your federal non-refundable tax credits, so personal amounts, CPP, and other amounts, and then your charitable donations down here. So this is your total federal non-refundable credits, and then any refundable tax credits as well. So you can see that climate action incentive amount is included here, and then any tax that you paid by installments. So again, I wouldn't get too overwhelmed by the math that's associated with all of these and like how this flows into the final number that gets paid out to you. TurboTax takes care of all of the math for you. Okay, so this next section, the provincial section. So because we live in Alberta, there's obviously credits and income tax that pertain specifically to Alberta. So we'll select continue. We've already done the work on this climate action incentive, but there's some additional questions to see if we might be eligible for more. And so you'll select that. This unused Alberta stock savings plan credit, again, if that applies to you, you can select that, or the Alberta investor tax credit. Again, if you're not doing any investing whatsoever, then chances are that won't apply. Okay, so for this climate action incentive, again, you just answer these questions. So at any time in 2019, were you exempted from income tax in Canada because you were an officer or servant of the government of another country? So yes or no. So we'll say no. And then, was a children's special allowance paid for your care in 2019? Again, if you're not sure what this children's special allowance is, TurboTax will provide more information there. And so you'll answer that based on how it applies to you, yes or no. Okay, did you reside outside of the following areas? So if you lived in Alberta, if you lived outside of Calgary or Edmonton or Lethbridge, then you would be eligible for a higher amount for this climate action incentive. And so again, you just answer yes or no. So we live in Calgary, so we'll say yes to this. No, sorry, we'll say no because we are saying that we did. Yeah. So did you reside outside of the following? So the answer is no. And then continue. And then there's an additional amount that you can claim for this climate action incentive for your dependents. So again, just answer this question here. So if your dependent or your child that you're claiming this for, if all of these pertain to them, then you would answer accordingly. So at the end, would you like to claim test credit, yes or no? Okay, and then this is a summary of the credit that you'd be receiving. So the base amount plus the amount that you would get for your child. Okay, and then on this next screen, so this is your Alberta tax and credit summary. And so the Alberta income tax, Alberta non-refundable tax credits. All of this information is provided here. Okay, and then in this next section, this is where we review our tax returns. So if you select continue, so this is just a double check just to make sure that everything's been included. So everything related to your income, your RSPs, your credits and deductions, and then your provincial tax summary. So if you select show more, it just has all of the information that you've entered, just as like a final check, just to make sure that you haven't missed anything. You can double check everything here and then select continue. And then this is where TurboTax are going to try and sell you on that expert review again. Again, if this is something that you would like, if you'd like to have somebody review your tax return just to make sure that you haven't missed anything, that's something you're welcome to do if you'd like. Okay, so this next screen is what they do is they check your return for errors and missing information. So if there's anything that looks off, then TurboTax will flag that for you. But in this example, we haven't come across any errors, and so there's nothing that's going to show up here. And so, but what would normally happen if there was an error? You would just read what it is, and then in some cases it won't apply to you. So again, you'll just like select to review the error, and then you'll have this option to correct the error or ignore it if it doesn't apply to you. And so TurboTax does a great job of asking you questions to help you understand whether or not this is something that you need to be concerned about. Because sometimes things will show up as errors or missing information, but it's actually not something that you need to worry about. Okay, so then on this screen, this is where you verify your personal information. So you'll just make sure that your social insurance number is correct, that your date of birth is correct, and then you just certify, yes, I certify that this is correct, or no, I need to modify it. And so, again, this is TurboTax trying to sell you this premium package where you get, I don't even know what this is, but just, yeah, additional stuff that they're trying to sell you. So if you want to purchase this, that's on you. Obviously, like I get no benefit from any of this. If you decide to purchase this, this is all related to TurboTax. Okay, so we'll say no thanks. Okay, and then this is just a summary of some of the deductions that they've claimed for you. Obviously, this isn't your refund. That's just the additional deductions and credits that have been claimed so far. I don't want to just to go back to this, I could spend a lot of time like explaining to you like in detail what all of these things mean. And if you're interested in that, like you can feel free to reach out. But I find that people, generally speaking, they just get really overwhelmed once I start talking about non-refundable tax credits and how those work. And so for the purpose of this tutorial, like I just want to show you step by step how you actually go through this process, rather than getting into all of the details about like what a non-refundable tax credit is and how it works and the math behind it. I just want to make things as easy as possible. It's nice that you don't really need to know because TurboTax does all the math for you to figure out what's your refund or how much tax you owe at the end of the day. Okay, and then this is just another review of the numbers that we've entered so far. So your total income, less deductions and expenses. So your taxable income, the $42,000. And then how much taxes you need to pay, and then how much you've already paid, plus any refundable tax credits. So that $666 is that climate action incentive. So that shows up here, and then the difference between these is your tax refund, or in some cases, if your total taxes owing is more than your payments and credits, refundable credits, then you would have a balance owing at the end of the day. And then what this is an annual estimated Canada Child benefit. And so because we told TurboTax that we had a child, and that child was under 18, we're obviously eligible for this Canada Child Benefit. And so TurboTax has provided an estimate of what they think that amount might be. And then your annual estimated GST credit. Again, these are things that TurboTax will ensure that you apply for and get. And so you can see like the payment schedule, how much you would be getting each month based on that one child that you have. Okay, so you select continue. And then this is just your direct deposit information. So you would either select yes, I want to set up or change my direct deposit info. So this would be the direct deposit information that has been set up with the Canada Revenue Agency. If you don't need to make any changes to this, then you would select this. This would be if you don't need to make changes or you've already set up direct deposit. So we'll select no. And then at this point, we need to file our return. So assuming we're happy with everything up to this point, what you would then do is select this start button. And this is where you would pay for your for TurboTax. So you'll select continue, enter your like your credit card information, all of that here, and then select continue. Once you do that, once it's paid, so we'll just close that. Once that has been paid, then this second option will come up where you can file your return. So you select file your return, and then you just click through, and TurboTax files everything with the CRA right away. So it all happens electronically. It happens in real time. It's very easy. So hopefully that was helpful. I know we went through a lot. We could have gone through a lot more because, as you can see, there's every individual's tax situation is so unique, and so we could have spent a ton of time talking about all these other different things. I didn't think that was, I didn't want this video to be 10 hours long. It would be 10 hours long if I spoke to each and every one of those things. I really wanted to focus on those things that are most applicable to registered massage therapists, and with some additional things as well. And so hopefully that gives you a flavor for how TurboTax works. But I would recommend that you give this a shot. The thing I love about TurboTax is that it doesn't cost you anything until you're ready to file. So you can jump in here, play around with the tools, and see if you're able to make sense of everything. And like I said before, TurboTax does a fantastic job of making things really easy to understand. And so you just go through and answer the questions and put in the information accordingly, and you're set to go. So I hope this has been helpful. And again, if you have any questions, please feel free to reach out to me.